Good morning. This is Kirk Spano with Fundamental Trends, Blue Mound Asset Management, Margin of Safety Investing, Soon Investor Ideals, 401kirk.com, all kinds of neat stuff coming by the end of the year. Today we're going to talk about oligopolies. Oligopoly is a wonderful word for the investor. David Tepper talked about oligopolies this week when he was talking about his gigantic position in Micron. And after being out of Micron for a little while, I'm back in it. Why? Because it's part of an oligopoly. So let's talk a little bit about semiconductors, China, oligopolies, monopoly pricing pressure, durable comparative advantage, things that make investing good, and then with China, that's going to have impact on Micron. So, what is an oligopoly? It is a group of companies, generally, that control an industry. And if you're a subscriber to my services, you know that I like those sorts of companies. Why do I like those sorts of companies? Because if you control the industry, you control the pricing. And generally, there's not a lot of cutthroat price competition. Cell phone service has been an exception to that, but that is quickly going away due to consolidation in that industry too. So, let's give some examples of oligopolies. Let's start with semiconductors, the DRAM space. All right. So with the memory that Micron makes for about 70% of their earnings, there's only 3 companies that make all of those semiconductors. You have Samsung, SK Hynix, and Micron. The demand for DRAM is going through the roof. And we can talk about that a little bit. And somebody actually posted a pretty good report for on the website the other day. Let's see if I can find that for you. Oh, my We Energies bill. Oh, I know where it is. Apologize for not having this up for you. Last night, my nephew came back into town. He's been training with the Air Force, and he is going to be going out east to the greater Virginia, Washington, D.C. area. And doing some pretty interesting things with the Air Force, going to be an intelligence guy. Although at 19 years old, I keep questioning his intelligence. All right. So let's talk about predicting the next wave of semiconductor growth. That's enough about my nephew. I talked about him before. All right. He's a good kid. He's probably going to do some pretty neat things. Somebody in the group posted this. I had actually glanced at it, but months and months ago. But this is about predicting the next wave of semiconductor growth. And when you take a look at the different eras of semiconductor growth, you start to realize that this is a pretty interesting curve. That blue line keeps bending up. A bunch of little S curves through every iteration of semiconductors, from mainframes to PCs to networked PCs to desktop notebooks, so the mobile. And this guy talks about the S curve. It talks about where we are. So I will post this link in the chat. But he talks about kind of where some of these curves are right now. And can they predict where the demand is going to go. Well, he gets to a point where he shows what the predictions were and what actually happened. So here they talked about what they thought was going to happen, what actually happened. Pretty close. Then they talked about the next era for semiconductors and PC notebooks, what they thought was going to happen and what did happen. Pretty much right on the nut. Cell phone subscribers, where they were way back here. Prediction and what actually happened. You notice something? These curves work pretty well. IoT opportunities. Smart meters. We had a company there that got bought out already. And we're looking at another company. Why? There's only a few companies in the industry. These are the curves for some of the things that are just starting. IoT wearables. Fitness trackers. Medical wearables. 3D televisions. Night vision systems. Okay. So all of these things that are tied together by the IoT, Internet of Things, and improving technology, artificial intelligence in particular, are pretty shocking. So here is the history of total transistors out there. Basically, all little pieces that talk. Send a message. Notice that curve. Just starting to rise. With all of these things that we just looked at on those curves, this is going to be the processing power that we need. And it's going to be pretty rapid because we're going to see the build out of the rest of the Internet of Things via the 5G build out that'll make the latency go away in the signal, right? So latency in 5G, the whole point of 5G is to get rid of the latency. No more buffering, right? It's going to take a lot of pieces to do that. A lot of processing power, a lot of gateways, a lot of need to deliver as well as store, as well as compute. And computing will end up being done near the edge. The whole term edge computing has to do with the processors being closer to you, right? The decision making being closer to you rather than way back in the cloud somewhere. Reducing, again, the latency because the decision, instead of being made 1,000 miles away, could be made near you, where the processing power will be. So when we'll see the alternative to the silicon transistor switch, we're already starting to see it. Different types of transistors, different types of semiconductors. When will those hit? Who knows? But it's already, we're already seeing the semiconductors change the way that they're built. They're running some physical limits, and now they're looking at different ways to do things. So if DRAM, NAND, X-point are going to be necessary, and the improvements are going to be necessary, what is the growth rate going to be? So the prediction here is very steep, because we're not going to quit on the 5G, right? We're not going to quit on faster communications. We're not going to quit on better communications. We're not going to quit on the way that we're delivering things. So there's three major areas of semiconductor growth. The data centers, which I talked about in the article, the gateways, I just mentioned that, then all the various IoT components. So the server's S-curve is actually not that steep, but it is still going up. Now all of a sudden we see what's going to happen as the IoT really hits. It's going to be steep. It's already happening. Just look at the curves. That's what's important here. These are all the things that semiconductors are going to be involved with. DRAM, big part of that. NAND, big part of that. Although NAND has a lot of competitors, about a dozen. So their pricing power is lower. DRAM, you've got the 3 competitors. They can control the pricing better. Where's it all coming from? All right, wearables. The peripherals will be wearables, smaller devices, connected homes, connected cars. I talked about this trip I took out to New York, actually about 10 different places. But in New York, again, next to the High Line, if you're in New York City at some point, or you live there and you're in Manhattan, go to the Samsung store over by the High Line. And what you will discover is just how smart everything's going to become. So in this smart everything world that I keep describing, the need for more memory, the need for more processing, it just keeps happening. And it's exponential. So if we're also running into physical limits, right, and there's more barriers to entry because of the physical limits, the companies that are in already are going to have even more control of the markets. So when some of these analysts talk about, well, in the 1990s, we had this very cyclical semiconductor industry. I mean, they're talking about a time when there was, I believe, 15, 16, 17, 18 companies out there making, supplying a lot of the semiconductors. And it just doesn't make a lot of sense. Because of the cyclicality in the past, a lot of the competitors went away. There were bankruptcies, there were mergers and acquisitions, because these companies at the time had to survive. So natural oligopolies developed because they were afraid of cyclicality. Well, ultimately, 2 things killed the cyclicality. 1, they had greater control of the supply, and 2, the demand in the last few years has started to really go up even more than it ever had in the past, and it's forecast to exponentially increase. So in this particular space, and the reason I'm talking about this is because everybody's getting flighty over Micron right now. Micron had some earnings last night that weren't quite up to analysts' projections. What have I said about analysts in the past? 4 out of 5 analysts suck. So, take that to the bank. The response from Micron is down a whopping, falling off the cliff, falling out of bed, 3.52%. 3.52%. Think about that. All these horrible things, down 3.52%. That's all the shorts can muster on Friday. If you're not buying Micron right now, after these little charts that I just showed you, knowing that there's only 3 competitors in the space, and Samsung doesn't want to see prices go down because they're making boatloads of money too, and they're the one company that could increase supply a bit, why wouldn't you be buying Micron at a price-to-earnings ratio of 4, a forward price-to-earnings ratio of somewhere between 5 and 6? Doesn't make any sense. So if you get a chance, go through this report. Try to understand what you're looking at. The demand for semiconductors is about to go through the roof. Now, are there some short-term headwinds? Sure. There's always going to be short-term headwinds to something. How about tariffs? Well, Micron is reporting the tariffs are going to impact them by a few percentage points. They gave it in basis points. I forget what they said. It was a few percentage points. All right. So for a company that has net income in the trailing 12 months of $12 billion, let's suppose it's not a few percentage points. Let's say that Micron's business drops 10%. They only have 11-ish billion dollars of net income. That's still pretty good. Let's say it goes down to 10 billion, which is, I did a back of the napkin analysis on here somewhere. That even if, here, the worst predictions for Micron were that they have a 30% drop in business for a year or two. That had them getting to a forward PE of 7. Think about the growth rate. What's a PEG ratio? Price to earnings to growth. What did Peter Lynch always say? You want a price to earnings to growth ratio of around 1, right? The price to earnings to growth ratio of this company, so you've got a PE of 4, and you have a growth rate revenue year-over-year growth of 40%. So at the moment, you have a PEG ratio of 0.1. Okay? If you look forward over here, and again, let's presume a slowdown. Let's presume their earnings drop 30%, all the way down to 9 billion maybe. All right? Yeah, 9-ish billion. Look at this PEG ratio, triple it. There's almost nothing you can do to give this company bad ratios. 7 billion in the bank. They actually have more than that with receivables coming in. So Micron has announced that they're going to return about 50% of their free cash flow to shareholders. So you're looking at between $4 and $6 billion a year over the next couple of years. They are authorized to buy back $10 billion in shares. So that's 20% of their market cap at the current prices. Oh, look. Somebody's paying attention. It was down 3.5% 5 minutes ago. All right. So when we talk about oligopolies, we really have to understand that that is largely what drives pricing power and comparative advantages. Take a look at other industries. What other industries, for people who are invested with us, what other industries are we in that demonstrate monopoly pricing pressure because they're some part of an oligopoly? Telecom, absolutely. Little fertilizer company that we're in, right? Nutrien. Oil companies. Oil companies are part of an oligopoly. It's a larger oligopoly, but really, if you take a look at who produces like 80% of the oil on the planet, what is it? It's three countries. It's Saudi Arabia, state-owned oil. It's Russia, state-owned oil, basically. And the United States, a fairly regulated oil industry, right? So when you have 80 to 90% of anything controlled by just a handful of competitors, there's going to be pricing pressure. Now, we know that it costs between, some $50-something on average to get tight oil out of the ground. And the mid-depth and shallow water oil wells, again, in the 50s. So why is oil in the 70s? Where's the typical 15 to 30% margin? It doesn't exist because the market is manipulated a bit. And right now in oil, Saudi Arabia is the swing producer. I've said that from the first time that they went after a market share. And then eventually it would come full circle to them being recognized as a swing producer again. This idea that OPEC is dead is not true. Iran's just basically being kicked out and the smaller players are being ignored. OPEC, for all intents and purposes, switching to a different oligopoly, is, and not a monopoly, as President Trump called them the other day. 3 competitors, Russia, the United States, and OPEC. OPEC, basically, you should think of OPEC not as all those, not Venezuela, not Iran, not all these countries, and not right now anyway. Think of OPEC as the Gulf Cooperative Nations, Bahrain, United Arab Emirates, and in particular Saudi Arabia, right? Saudi Arabia is the only one with spare capacity for the most part. When you see these conspiracy theories that Saudi Arabia is running out of oil, just remember from May to June, they added 1 million barrels a day in 1 month of production. 1 million barrels a day in 1 month. Does it sound like they're running out of oil? No. Saudi Arabia has the most oil on the planet that happens to be cheap. Now, there might be gigantic deposits around the planet, but they're expensive to get to. We know that the autonomous electric vehicle is coming sometime in the 2020s. They don't have a lot of time to make their money. They got about a decade, and they know that. At some point, the price of oil is going to come down again. It's going to come down a lot. And I have a working theory on this that I haven't put out there yet, but I'm pretty sure I know about when it's going to happen as well. So, we have a year or two to make a lot of money in oil. 30, 40, 50% if you're just buying shares. If you're using options, you can double and triple your money. So, take a look at what's really happening in these markets. Somebody mentioned Telecom earlier. Yeah. You've got Verizon, CenturyLink, and AT&T. Really the only 3 wireline companies out there. If you take a look at that new ETF, the communications ETF, you'll see that, you really should throw Charter and Comcast into that mix. And the new ETF, I think, is XLC. Yeah. XLC, I just talked about this a couple of times. These are the holdings in XLC. Financial Times and Wall Street Journal and somebody else were talking about this today. The Google and Facebook got pulled out of the technology ETF, put into this ETF, and what does that do? Well, people love to invest in Google and Facebook, so now they have an ETF with them in it and a bunch of dividend payers. So the dividend, I don't think it's announced yet. Dividend on this ETF is going to be around 2%. It's going to be, even though the 2 biggest holdings don't have a dividend, take a look at a lot of these other companies. They do. AT&T has a big fat dividend. Walt Disney's paying something, I believe, 2-ish, 1.5. Yeah. Verizon, probably 5%, right? 5%, 4.5. This is something that we were buying down here under 50. So why is this important? Because these companies were basically ignored by the investing public. The Telecom ETF didn't have anything in it. So now it's in this group, and as shares flow into the ETF, they get distributed based on market cap, and some of these companies get a whole bunch of money dumped into them that they didn't get dumped in there before. So let's take a look at AT&T. First day that this is trading, look at that, up. So when I was telling everybody to buy AT&T a few months ago and being told I'm stupid to buy it at around $33 a share, look at that, we're up $1 already. and our effective yield is going to be over 6%. So as money gets poured into this is going to rise. So going back to the oligopoly discussion, who controls all the internet access? Comcast, Charter, Verizon, AT&T, CenturyLink, and Viacom. Right? There might be one or two that I'm missing. So in a country where everybody has internet service, and it's pretty much become one of the most important things out there for everybody, if there's a half a dozen companies controlling that industry, what do you think is going to happen to prices? Ask yourself this question. If your internet service provider raised your rate $10 a month, what would you do? You probably only have one or two or three choices where you are. There's nothing you can do. Ultimately, if the expansion of companies like AT&T into content don't work, they'll just raise prices. Verizon has chosen not to bother with content. What does that tell you? It tells you they plan to raise prices. So if we're in industries where we know that they can raise prices, we're probably going to do pretty well with those investments. Buffett talks about it all the time. So keep that in mind. Nutrien, another one of the companies that we're in. Why? There's only a couple of fertilizer companies out there. There's only a few fertilizer companies out there. There's only a couple that really do potash. So when Agrium and potash merged, it was basically a vertical merger because potash was doing most of the production and Agrium was doing most of the distribution. You've got Mosaic, right? That's part of another group that they're sort of together. Those three companies used to, and I guess technically still do, operate as an oligopoly, but they're down to two companies, so it's really a duopoly. You got CF Industries, different type of fertilizer, not really any competitors. So when you take a look at these markets where there's high demand and only a handful of companies controlling supply, you have to realize they have the ability to raise prices, which means they have the ability to raise earnings and revenues and earnings. So that's where we want to be for the most part. Warren Buffett talks about it over and over and over again. He recently said that Google has a lot of characteristics of a monopoly. I think they're really moving into a duopoly with Facebook. And I actually think that several of these companies, AT&T in particular, is going to move heavily into advertising as well, even more than they are. Why? Because they control the pipes. Verizon, if they ever figure out what to do with their internet properties, could get very much into advertising as well. But their oath is not doing so well. So you've got a handful of companies that control advertising. What about streaming television? AT&T is in that. Netflix, probably overvalued. But what about Disney? Disney suddenly becomes a very interesting company as one of the new competitors in what will be an oligopoly for streaming television. There's only going to be 4 or 5 providers. Why? Because there's only so much content to distribute. Sony is going to have to land with somebody. I think that Sony probably sells off their entertainment division. I don't know who to, but Netflix would make sense to me. Amazon would make sense to me. So, interesting. Amazon's not in this fund. Hard to know where to put them, right? Because if they get bigger and bigger into entertainment and they're already in the cloud and they're already doing retail, where do you put them? Do you ask them to split the company up? Yeah, tell Jeff Bezos that. So delivery is going to become more important in the future because content actually is being made nonstop. My daughter's making YouTube videos that make her money now, so, content is king until everybody's doing content, right? So, all right. Let's take a look at some questions. Like I said, I didn't have a big presentation today. But I just want you to think about industries where there's few competitors. Industries where there's no substitutes, right? Does anybody know the actual definition of monopoly? What is it? Because most people get it wrong. Board game that takes 3 hours. Who can play Monopoly for 3 hours? Somebody always flips the board over at about an hour and a half. All right. What is the monopoly? What's the definition of monopoly in economics? Nobody knows. There's a word. There's one word that's really tied to it. Unfair competitive advantage? Nah. It doesn't have to be unfair. Why is it unfair? Sometimes it's just natural. All right. So in economics, when we talk about monopoly, it's not just that there's only one competitor, that there's no competition, right? You can get monopoly pricing pressure in a lot of places, and maybe that's how I should have asked it. Where do we get monopoly pricing pressure from? When there's no substitute, right? So if there's only one competitor, there's no substitute because they're going to dictate the price. But what about industries that are so necessary that it doesn't matter if there's a lot of competitors, they can all charge as much as they want? Utilities, right? We need water, we need electricity. Why do we regulate the utilities? Because otherwise they could really charge us as much as they want because we have to have it. But healthcare. Everybody talks about let's have more competition in healthcare. Why won't it work? Why hasn't it worked? 37, 38 years since we started going to the model that we got rid of under Obamacare but kind of didn't get rid of. Why is more competition not going to matter in healthcare? Because there's no substitutes, right? You can't say, well, I'd rather go to a Brewers game than get heart surgery. I can do that, but if I need heart surgery, I'm going to die, so I don't get to go to the Brewers game anyway, right? So you need to take a look at these things. People put out exclusive possession or control of the supply or trade in a commodity or service. Kinda. Nah. It has to do with substitution, right? Think about your relationship with your spouse. Think about it. Is there a monopoly there? Mm-hmm. Right? So think about that. If there's no ability to substitute something else, there will be monopoly pricing pressure, whether there's one company controlling or many. So with oligopolies, they're generally in industries where there's no substitute or no near substitute, and they control the pricing. And they keep pushing pricing up incrementally over time. Why incrementally over time? Because then they never get called out for it. Nobody says 10 years ago you were charging half. They should, but they don't. Company says, oh, we only raised prices 4% this year. We only raised prices 6% this year. That's barely more than inflation, right? But do that for 10 years. And that's what's going to happen in a lot of these industries that we're going after. Telecom, I think, is going to be a huge beneficiary of this. The Verizon strategy should tell you what's coming. I said earlier that AT&T really didn't need to buy Time Warner. And I stand by that. I don't think they needed to. I think they could have stuck with their internet strategy, both as the pipeline and having home pages and whatnot, and getting into advertising. I think they could have done that. Is having a streaming service going to be a big deal? Yeah, probably. So they're going to have a streaming service too. That makes AT&T kind of a triple play. Delivery, content, advertising. I think AT&T is going to do very, very well over the next 10 years. They're going to break out to a new high range. The dividend's going to keep growing. I put them right there with Intel as two of the best dividend growth stocks. So keep in mind, again, Intel, oligopoly. Not a lot of companies doing what they do. Therefore, they control some prices. Are there short-term periods where there's a little bit of a drop in price? Sure. Is there ever sustained lower prices? No. And when they have an improvement in technology, they pass on part of the improvement and they keep part of the improvement. All right. Let's go through some questions. Warren Buffett once called pricing power the single most important decision in evaluating a business. Right. If you've got the power to raise prices without losing business to a competitor, you've got a very good business. And that's what we're talking about. Oligopolies make that happen, even if there's some back and forth. Yes. Micron's terrible guidance for a full year leaves them with a forward PE of 3.6. Right. Doesn't make any sense. High growth industry. You know, let me tell you a little something about Wall Street narratives. I know that I go on this rant once in a while. You're getting lied to by Wall Street pretty frequently, right? And it's not direct. Wall Street has analysts that are second tier. How do I know they're second tier? Those are jobs that I turned down. I don't want to be a Wall Street analyst. I'd have to work more and make less. And I'd probably have to listen to the investment bankers. Hey, we're doing a deal or trying to get a deal. Make sure you say this. Make sure you don't say that. Take a look at my tip ranks and you take a look at my Seeking Alpha articles. I'm not an Uber bear, but probably 15-20% of my recommendations are bearish. And honestly, if I wanted to be a full-time bear, if I wanted to be a short seller, it is within a few years. I'm gonna do that for a while, but there's really more companies that are bad or mediocre than there are good or great. So if you wanted to just bet against things, you could do it. The problem is the structural way of doing that, right? Shorting and buying puts, it's expensive, so you can't screw up. All right. So somebody's talking about Micron, why it's hard to understand, what's going on there. Well, I talked about the reasons why before this came out. I talked about the reasons why DRAM was a little bit slow. And I pointed out that the supply of CPUs is struggling right now. So there's just been a little bit of a slowdown in the notebook business. The server business is pretty steady, but the marginal increases from notebooks stalled out. Right? Down 0.2%. It's not a growth rate. That's negative growth, right? So, you're normally getting 2, 3, 4, 5% of growth, and all of a sudden you get 0. People get all bent out of shape. So, what does Peter have to say? It was the company guidance being slightly lower, hard to analyze from the outside. I don't think so. I wrote about it right here beforehand. CPU growth slows demand for attached storage, right? Analysts are between a rock and a hard place. They really can't say bad things, or companies will cut them off. No, it's not true. And the analyst firm plans only use analysts for corporates. Well, yes, there's some truth for that. The investment bankers. Right. You do talk to a couple of analysts, and some of them are pretty smart. The difference between what they say in public and what they say in private actually are different from time to time. But I will stand by 4 out of 5 analysts suck. Don't have any sympathy for the Wall Street analysts. None at all. They made their bed. You know, if they wanted to actually be good at their job, they'd go to one of the companies that actually wants them to be good at their job, or they'd go do their own thing. Okay. Somebody asked about shale. We'll talk about oil in a minute. I sold all of my January 2019 leaps for decent profit. Is it okay to sell January 2020 leaps, then try to get back in October? All right, so last week I talked about how I think there'd be a small correction in October. If you want to be really cute, you can try to trade it. I wouldn't do that. All I've done is raise some cash up in that 35-40% level, back at the top end of the range where I have the asset allocation chart set. And I just plan to buy on the dips. And I don't think the dips are going to be all that bad. But I think you're going to see earnings statements across many industries similar to what we just heard from Micron. And what it's going to be is that, hey, our outlook, because of the trade issues, is a little bit cloudy. You're going to hear that a lot. And that's going to shake up the market. And then all those companies that are doing buybacks are going to drag the market back up. So I've been looking real hard, and here's a homework assignment for you. Try to find the companies, and we might have to go one by one, and see how much they have bought back based on their authorizations for stock buybacks, right? So we talked about that last week. I haven't been able to find the information published anywhere, so it's probably going to have to be a company-by-company hunt. So we can find companies with the biggest authorized buybacks. I think that'll pop right up. Companies set the buyback control. Buyback. There we go. This is the one. I think this is the one. Yeah. So there's a website out there that has all the buybacks listed. It might have been that one. But we don't know how much of their authorized buybacks they've used per company. So if we really want to game that, we want to figure out what companies are about to buy back a ton of stock. Hint, Micron's one of them. So, all right. Thoughts on portfolio weight on Micron? 2% moving to 4% or 6%? I'm at about 6% for most people. Right price, how will you get VIX exposure? I will buy calls, and the right price isn't here yet. When are you giving us an option strategy update? Over the weekend, I was waiting for the expirations. Yeah, Jacob money flow on MU is negative, but how negative? Not terribly negative. And I think if you take a look at weekly, it's not so bad, right? Still doing pretty good on the weekly here since August. Somebody's buying it. Dipped a little bit in the last week. Big deal. That low to there. Connect those lines. It's still up. That's why using the weekly is helpful. Get a better look at the lines. So money flow is still improving. You know, it got beat to heck from here to here. This is an inflection point. Money flow is going to start going into Micron. A lot of it might be their money, and I think a lot of it's going to be David Tepper's money. Oh, look. It's down less than $1 all of a sudden. All right. Bought some Qualcomm at 54. Yeah, I think that was a great buy. We talked about Qualcomm. I'm not buying it now. Yeah, we talked about it in here. Great buy. Great buy. I'd probably be taking some profits. It's going to run into resistance pretty soon. Yeah, I'd probably be selling covered calls, January covered calls. Maybe set some sells at like 78, 79. Any particular stocks recommended for a Roth IRA? Sure. Talked about AT&T today. 6% dividend. Love to have those big fat dividends going into an IRA. Intel. I think Intel is one of my favorite stocks for dividend growth investors. Again, part of an oligopoly. Pulled back a little bit for you. Yeah. It could go a little lower, sure. Could it get to upper 30s? Yeah, it could. I'd just buy more there. All right. Did I miss anybody's questions? CenturyLink, yeah. Boy, weren't we dumb for buying CenturyLink in the teens? We're so dumb. So dumb. All right. All right, so somebody wanted to talk about oil. A couple people did. Again, I wouldn't game the oil too much. Why? Because we don't know when something bad is going to happen in the Middle East. And I'm pretty certain something will happen bad in the Middle East. I don't know when, but are you guys aware that Israel is striking Iranian targets almost daily in Syria? Right? That's going on almost every day. Russia just got mad at them for blowing up. Actually, Syrian fighters tried to shoot down Israeli jets. The Israeli jets got away, and the missile hit a Russian surveillance plane. And so Russia got bent out of shape about that. Iran, somebody noted it somewhere on either the chat or one of the chats. Iran just did more military exercises in the Straits of Hormuz. So this idea with oil that it's not going to rally, look, either oil's going up or oil's going up a lot. And I said that back when it was $30 and $40 a barrel. Now it's 70 plus. I don't know, is that a lot or is that a lot? You know, it's one or the other. So either way, it's up. In the short term, there's some supply pressure on oil for two reasons. One, 1 million barrels are already off from Iran, and it sounds like it's going to go to about 1.3 to 1.6 million barrels a day, not hitting the international market. And that's because the countries don't have necessarily a say-so. Because most countries are at least somewhat integrated with the international trade system, which is largely run by the United States, if companies want insurance, you know, refiners want insurance, they really can't take the Iranian oil. So while a country like India or China or Russia, but mainly India and China, which are the two biggest importers now anyway, can say, hey, you know, unless the UN puts on sanctions to Iran, we're not gonna obey it. That's fine. They can say that all they want, but the refiner is in a different position. The refiner says, well, we need insurance. We can't buy insurance if we buy Iranian oil, right? So these sanctions have been pretty successful. And in reality, the Europeans don't like President Trump, but they do want to support this. You know, if Hillary Clinton had said, hey, this is what I want to do, let's figure it out, they would have done it. President Trump said, I'm going to do this, go screw yourself. You know, they have a different reaction. So, you know, whatever, butter emails. So the reality is that a lot of oil is coming off from Iran. You still have disruptions around the world in production in Venezuela, in Africa. You're not going to see huge amounts of oil coming from any spare capacity in Saudi Arabia. They're just not going to do it. So they're going to make money while they can make money. They already got President Trump to do what they wanted him to do. I don't think they care if he attacks them, but I think he might. The Israelis are already attacking Iranian targets in Syria, which is what I talked about, is attack the Iranians that are not inside of Iran proper. And that's what's going on. So, you know, you could take it for what it's worth. Pretty much everything I've laid out has roughly come to pass or is happening right now with oil. I would say that oil is going to get to $80 a barrel imminently. I thought it might have got there over the summer. They got close and it pulled back. It'll probably get there after, in November. So, remember, U.S. production of shale is already flattening out. I've been talking about this. Somebody posted a Gehring and Rosenzweig letter saying that U.S. shale production is poised to falter. I didn't read the article yet, but hey, investor of the future, tell me if what I'm about to say is about what they said. Because of the pipeline constraints in the Permian Basin, for about the next year, U.S. production is going to be flattish because the other basins have to pump more just to offset the declines. So the Permian is stalled because of pipeline capacity, and that'll last until next summer, right? We don't know if it's early summer or late summer, maybe even the end of the year. Technically, the schedules are the end of the year. I have said that I think it'll happen faster that the pipes come online. I think the pipelines will all come online 2, 3, 4 months early. That's what I think. I could be wrong. I'm just basing that on experience, not anything I've seen. And then U.S. shale production is going to slow down again in about 2021. Early 2020s, shale production will slow down again. Why? Because we're going to run into physical limitations, and you can take the other side of this bet. But for my money, I am betting that we're going to have a Democratic president and Democratic Congress in 2021. And when that happens, the mileage standards are all going to come back. They're all going to go back up. And there's going to be a lot more. There's not going to be any more pussyfooting around with getting rid of fossil fuels. Sometime in the early 2020s to middle 2020s, there's going to be an all-out push to wipe out coal and oil. And you better be ready for it. So, could I be wrong about that? Yeah, I think every hurricane that hits, I'm a little bit more likely to be right. So, keep that in mind. And it doesn't matter if the hurricanes are caused by climate change. It doesn't matter. A lot of people think they are. It doesn't matter what you think if you don't think they are. It doesn't matter. And you're in a minority anyway. So, keep that in mind. I think that coal and oil, coal first and then oil, are going to be in big trouble in the 2020s. The oil opportunity here is very short term, a year or two. And, I could be wrong, but we'll see. Any thoughts on what Ray Dalio has been talking about recently? Yeah, I've been talking about the same thing that Ray Dalio has been talking about for 2-3 years now, since 2015. And eventually, there has to be a washout of all the clutter that's been created in the last 37, 38 years. 2008, 2009 could have been a chance to clear out the clutter. We decided not to clear out the clutter. The next time we'll have to do it. The millennials, I hope if there's any millennials listening, you're paying attention. Set the ideology aside, whether you're liberal or conservative or somewhere in the middle. Just think about this pragmatically, based on evidence. And what you will find is that we are on the path of greater and greater wealth inequality. Drive around the country like I do, just once. Go for a road trip. Don't fly to a beach. Get in your car, drive 2,000 or 3,000 miles, and stop at every little town. Stop anywhere that you see a factory that's boarded up or got busted windows. Talk to the people in the cafes, at the bars. Drive around and do that. That's what I do. I just did 3,700 miles. I stopped in 10 different states and Washington, D.C. in every place. The guys that my son and the guy that I was with, I know that they didn't like stopping at all these places, but hey, it's my car. So I stopped. I stopped in Beaver Falls. I told Jeff Bezos in a couple of tweets yesterday, go to Jeff Bezos' timeline or my timeline on Twitter. I'm telling them they ought to put the headquarters outside of Pittsburgh. Why? Because it's a beautiful area. There's a lot of universities. It fits all their criteria. And by the way, that part of the country needs it. Why throw the headquarters over on the East Coast? Why? There's too damn many people living on the East Coast. 10 million people from the East Coast ought to move inland, right? All these people who lost houses ought to move to Tennessee, ought to move to Pennsylvania, ought to move to Ohio, ought to move to Indiana. Maybe not Indiana. Indiana's a nice place, I guess, if you're there, but I've never been particularly entertained in Indiana. But Ohio, Pennsylvania, Tennessee, Missouri, there's a lot of good places in the middle of the country that a lot of people ought to be moving to. After what I saw in Brooklyn and what I saw in Queens and what I saw in Baltimore, what I saw in Philadelphia, it's just stupid that we're packing people into these cities where there's no more upside. Move to the middle of the country. You get better weather, your food will be cheaper, right? A lot of the people are nicer. There's not as much stress. Fewer cockroaches for sure. That was a wonderful experience in an Airbnb on in Brooklyn. So anyway, a couple more questions here. Can you talk about shale depletion in the Bakken? Yeah, we can write an article about that. Like I said, all of these shale plays are going to run short on oil by the middle 2020s anyway. Bakken is one of them. Oil option trades, best risk reward. Yeah, we'll get to that. I'll publish something. For VIX exposure, what ticker? VXX. But not anytime soon. The VIX has to get down to about 10 before I'll buy calls. Yeah. Okay, so what I said. So Investor of the Future talked about that oil article and said they're saying the Eagle Ford and the Bakken are closer to depletion than projected. Exactly. That's why, what have we been focusing on? Which basin did I keep telling us to focus on? The Permian. Other ones in 5 years are going to have trouble. So, or less maybe. I don't know. But I don't want companies in those other basins. The only reason I own Continental in my aggressive accounts is because, or actually in qualified accounts, is because they're not hedged to the price of oil. So rather than betting on the price of oil, where I have to use a leveraged ETF to really make money, I can buy calls on Continental, and I don't have to worry about all the leverage problems with ETFs that are using futures. Each Sunday, I've been watching your Friday presentation on YouTube. Do you have a recording on fundamental trends that includes a recording of the chat? No, I only do one presentation. This is the one. So, yeah, that's all there is to it. You reference $80 oil. Are you talking about WTI or Brent? WTI. Brent's is always going to be a few dollars higher. WTI is what matters to our investments. Kinder Morgan, would the recommendation be to sell before 2020? No, the reason I own Kinder Morgan is because they're the largest natural gas pipeline. I'm going to probably keep Kinder Morgan a long time. That's what I was getting at. All right, if I missed something, let me know. Otherwise, we can call it a day. Is that it? All right. 1 hour on the nose. Get out of here. No, really, get out of here. Have a great weekend.